Got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
Okay, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. This is episode 326. So it's 5th of July here in Singapore, 11 a.m. GMT plus 8. All right, so if it's your first time here, a big welcome. We do this currency call every Monday to Friday. So the currency we analyze, the schedule is as follows. So Monday, today we'll be doing the Aussie and Kiwi, Tuesday Euro, Wednesday Pound, Thursday Yen and Gold, Friday Canadian Dollar and cryptocurrencies. And yes, this currency call, you will get market economic updates, key support resistance levels, trade ideas and more. You will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so first off, let's hear from Kim Hong, currency analyst at LCMS Traders. He will give us a breakdown on the NFP release last Friday, and also a quick brief on the RBA rate statement, which will happen tomorrow. Kim Hong.
Thank you, Junwei. Yes, it's 5th of July here, and it's 4th of July in the United States. So happy Independence Day to whoever's watching the currency call from the States, okay? So, okay, today I'm going to have to cover like 3 stuff. So the first thing, okay, what happened? Okay, so last Friday, the US non-farm payroll data was released, okay? So I'll just show you guys the data right now. Okay. So when we look at the data that was released last Friday, okay, the first impression is probably like, it's quite good, right? Because there's 850,000 jobs were added for the month of June, okay? Now, personally, I feel that this report is very mixed. Mixed in a sense that I will be explaining to you guys right now, okay? First of all, yes, we see an increase of 850,000 jobs as opposed to the expectation of 700,000 jobs increase in June, okay? Sorry, my throat is not very good today, okay? Now, why do I say that this report is mixed? Okay, although we see an increase in the number of jobs being added last month, in fact, okay, this figure is actually the highest since last August, okay? Let me just switch over again, okay? Sorry for the switching here and there, but okay, you know what? I'm just going to go through this point first before showing you guys another table, all right? So, yes, although jobs have increased by 850,000, okay, last month, there is actually, if you look at the labor participation rate, okay, so basically the labor participation rate. So what is labor participation? So labor force participation is actually, so labor force is the number of people who are employed and the number of people who are unemployed, okay? So the labor force participation rate is actually the percentage the percentage of the people who are either unemployed and unemployed, who are actually actively looking for a job, okay? So for people who are like retirees or who have struck the lottery and are actually like as good as retired right now, they are not looking for any jobs, okay, at the moment. So that means they are not in the labor force, okay? So why is this important? Because we see that labor participation rate has remained the same, 61.6, okay? So this is the labor participation rate for since last year, all right? So as you can see, the strong dip here, okay, initially there was a dip to 62.7. This was actually last 2020's March, okay, when COVID-19 was announced as a pandemic, all right? It actually declined to 62.7, okay? And then the following month, it'll actually have a strong fall to 60.2%, okay? So if you look at the data, the past data, participation rate has actually been averaging around like 62, 63-ish, okay, until it actually dropped to 60. And then in recent months, okay, it has been averaging around 61-ish%, okay? So what this means is that there are still people who are not actively looking for a job, okay, which is not what the government wants, all right? What we want is people are actively looking for jobs and, or other than the retirees, okay, and of course, contributing to the labor market. But that's not the case, okay? That's not the case that we are seeing right here. So that is one of the things that creates this whole mixed conclusion, okay? Yes, jobs has increased, but the labor force participation rate remains unchanged, okay? Now, second point here is the unemployment rate. We see that there's a slight dip in unemployment rate, okay, from 5.8%, well, I would say a slight increase in this case, okay, from 5.8% to 5.9%. Now, we might think that it's not very nice, okay, for unemployment rate to go up. Yes, but if we were to look at the reason why, okay, maybe it's actually forgivable, okay, I would say. Now, reason because, okay, the BLS, the Bureau of Labor Statistics, okay, United States, actually said that the slight increase in unemployment rate is actually due to more people leaving their jobs voluntarily. So why do people actually leave their jobs more voluntarily? It's probably because they are looking for a change of job, right? To actually sort of like, looking for better job or suitable jobs, okay? And this is also due to a rise in the number of job seekers, which is what we want to see, okay? What the government wants to see, more people looking for a job. So you see, there's actually like, in a way, kind of like a contradictory view, okay, between what I've said earlier on the participation rate and the rise in the number of job seekers, okay? So again, this point shows that, the data is a bit mixed in terms of the, opinion, okay? And the third point that you guys may be focusing on is the average hourly earnings, okay? There is a continued increase in average hourly earnings, okay, by 0.3%, okay? This is actually good, I would say, but however, okay, you would have known that recently there are companies out there who are actually increasing their wages, increasing employees' wages, okay, in an attempt to lure more people, lure more workers, employees to work for them, because there has been a shortage in the supply of labor, okay, while the demand of labor has increased, okay? Now, so it's actually nothing much to be happy about, because the average work week, which is the average hour, the average number of hours per week, okay, for employees, work week has declined, okay? So yes, hourly earnings, wages have increased, because of companies wanting to lure more workers in, but the average work week has declined, which is not very good in this case. So you can see that the three main focus data that we are looking at, okay, actually have something to counter them, okay, which means it's actually quite a mixed report, I would say, all right? So, which is why you don't really see, which is why you see during the first hour of the release of the jobs report, there's actually like a downward movement, a weakening, a strengthening in the US dollar, followed by a weakening in the US dollar, okay? So all these will actually be factored into the Fed's next meeting, okay? I'll be very interested to hear what the Fed has to say, or more members have to comment on the jobs report. So with that, okay, I will leave it as here first, okay, and you guys can actually think about it. We can take discussions to Traders Club and things like that, okay? Now, moving on to the second item, okay, what did not happen? Okay, what did not happen was actually a conclusion from the OPEC Plus, okay? So last Thursday, they were supposed to have the meetings, and they actually postponed it to Friday because UAE, has an issue with his production baseline, and they want production baseline to increase from the current 3.2 million barrels per day to 3.0 million barrels per day. Now, apparently the issue wasn't resolved, and they actually decided to postpone the meeting again to today, Monday, okay? Now, but at the moment, we're actually seeing a pending, I would say a pending plan, a pending, I would say a quota plan from the OPEC Plus. So at the moment, all of the members, okay, except for UAE, actually agree to increase supply by 400,000 barrels per day for the period of August to December. Okay, so at the moment we are just waiting for the whole issue of the UAE baseline increase to resolve before we can hear something from them, from the OPEC Plus in general. Okay, now remember this: if the UAE, if this issue is not resolved and the UAE decides that, you know what, this is not a deal that we want, okay, the whole 400,000 increase in barrels per day of oil production is not what we want, then it's as good as no deal for the whole OPEC Plus. Now, what this may lead to is that individual members of the OPEC Plus may start to go around and just come up with their own production figures. That may actually lead to some, I would say, chaos in the oil market. So yeah, let's just hope that they can resolve this issue and come up with an agreed plan for today. Okay, so that's what did not happen. Okay, now moving on to what will be happening tomorrow. Okay, the Reserve Bank of Australia will be kicking off the month with their first monetary policy for the month. Okay, so they will be announcing the decision at 12:30 GMT +8. Okay, tomorrow. Now, previously, the central bank sounded very optimistic in the rate statement. Okay, they mentioned that progress in reducing unemployment rate has been faster than expected, increase in borrowings by investors in the housing markets and things like that. Okay, now they also mentioned an important key point, and that is that QE evaluation will be held this time round during this meeting. Okay, tomorrow, 6th of July. Okay, now I'm going to show you guys this thing. So what are the options that will be open for the central bank? Okay, so as you can see, this is actually a speech from 17th of June, last month. Okay, now by Philip Lowe. Okay, so towards his speech, okay, he actually mentioned this. With the current 6-month bond purchase program to be completed in September, the board will be working through a range of options for what comes next. Okay, so these options include, first, the ceasing purchasing bonds in September. Personally, I don't feel that this is a possible option. All right, and they also mentioned that over here we have made no decision yet, other than to rule out the first option. So it's unlikely going to happen because they are going to do what's called the premature exiting of bond purchase of QE. Okay, so option 1 is likely out for now. All right. Now, second option, repeating the current $100 billion purchase program over a similar time frame, which is, I think, pretty much to hold things unchanged. Okay, so previously they actually decided to do a 6-month bond purchase program, okay, for $100 billion purchase. So option 2 will be to do this thing again, all right, to extend it by 6 months, $100 billion purchase over a similar time frame. Now, personally, I feel that this is unlikely. Okay, as you guys know that there's been good progress in the economic recovery in Australia. Okay, COVID cases has declined substantially over the past 6 months. Okay, so if they were to repeat the whole 6-month bond purchase program at this rate, okay, yeah, it's not going to do those recovery justice. Okay, that's what I feel. Now, third option, scaling back the amount purchased or spreading the purchases out over a longer period. Now, this is possible. I would say it's possible. Why is that the case? Because they, instead of purchasing one lump sum, $100 billion, okay, of bonds over a period of time, they are now looking at, if they were to adopt this option, they will be looking at maybe, say, for example, bite-size kind of bond purchases, okay? And this gives them, I would say, some flexibility in terms of, if they want to ease or if they want to make adjustments to rate, all right? So the flexibility actually makes this option possible, okay? Now, fourth option, which is what I personally feel that is most likely, okay? Moving to an approach where the pace of the bonds purchases is reviewed more frequently based on the flow of data and the economic outlook. Now, this will definitely provide maximum flexibility for adjustments. Okay, if they were to purchase bonds at over a period of say 6 months or 1 year, and they say that we are going to review it on a monthly basis or maybe even a quarterly basis, this will give them the flexibility to tone down the bond purchases as and when necessary. All right. So option 4 is likely. Personally, I feel that option 4 is going to be a likely option for the RBA to adopt. Okay. Now, nonetheless, I would want to warn you guys, okay, that yes, although COVID cases has dropped, but it has also increased over the past 3 weeks, I would say, okay, 2 or 3 weeks during June, okay, due to the Delta variant. This has actually caused some lockdown to take place in parts of Australia, okay. So even if the central bank is going to adopt option 4, which gives them maximum flexibility in terms of reviewing, don't forget that this may actually give them the flexibility to increase bond purchase, okay, if necessary in this case, okay. Hence, if they were to be hawkish, okay, in this case by adopting the option 4, they may actually send out a cautious tone as well, warning that we should not rest on our laurels. We should continue to pay attention to what's going on in the COVID situation, especially with the Delta variant and things like that. All right. So I would say this time around, we may actually be seeing some action, okay, in the during the announcement of the monetary policy by the RBA. Okay. Now, something to take note of is that there will also be a press conference at 1400 hours GMT +8. Now, normally there's no, like for the previous 2 or 3 meetings by the RBA, there hasn't been any press conference. Probably there's nothing much to talk about. Whatever that they want to talk about has been conveyed through the interest rate statement, okay, or the monetary policy statement, okay. This time around, I personally, okay, it's just like a gut feeling. I personally feel that they're going to do something. They're going to carry out something, maybe not dramatic, but it's just a different action from the previously adopted ones, okay? Which is why Governor Low will actually be holding a press conference to actually, maybe to clarify the doubts that the market has, or to give a clear, I would say, a clear outline of their actions. Okay, so pay attention to tomorrow's meeting. Look forward to it, and yeah, join back the currency call tomorrow. Well, I will update you guys on what happened on the RBA, and hopefully something will come up from the OPEC Plus meeting. All right, with that, I will pass it back to Junwei.
Thanks, Kim Hong. Thanks for giving us a breakdown on the RBA and what to look out for tomorrow. Okay, so let's head off to the charts with Scott Andrews here from Forex Briefcase Australia to start things off with the dollar index. Scott.
All right, hi everyone, happy Monday, and thank you, Kim Hong, as well. Again, guys, I hope everyone was paying attention to that in regards to the specifics behind what happened on Friday, because it's quite easy to get lost in the headline figure and then sort of be a little confused. And if you might have traded on Friday night, it's probably time to reflect on the necessity to sort of maybe just wait and let things settle, because I've got the daily time frame up here now on the charts with Samtrade, and really what we saw was a run up of the US dollar, and it nearly honestly got close to 93 flat. We saw the high of 92.73, which we haven't seen since mid-April. So really what we saw was just a little bit of signs of fatigue and a healthy pullback, to be fair. I mean, there are still issues going on with unemployment and things in regards to people, leaving work, looking for, better employment opportunities. But, with the 10-year bond yield that pulled back again, and equity markets are still pushing higher as well. So the risk sentiment seems, quite healthy, although we are seeing the precursors with the economy and the price of goods and services and things of the like, that in the medium term, we are going to see pressures exerting on the Federal Reserve that aren't really going away. So, you know, obviously Gim Hong was talking about the RBA, and now the big thing is for a trend to develop, we have to see some clear guidance. And I think if Australia hadn't, you know, gone into the lockdown situation and everything was looking pretty good with vaccinations, I'd say, you know, it would probably be, you know, the tapering could definitely exist there in Australia, but it's going to be a dynamic situation because our vaccination rates are quite low, and there's a lot of issues there still present. So for the US dollar, the case is bullish. And I don't want to extend this out unnecessarily. There's not a lot of news out today, guys. So you more than likely see sideways markets. But this pullback here was, you know, reasonable, and it wasn't like the market was freaking out or anything. And I think, to be fair, we'll probably see the NFP numbers still high next month as well. And I think it's only upwards from here for now. And we'll just see, you know, obviously 92 has affirmed itself as support, and we could just see floating around here for now. We've got Tuesday, we've got, you know, a little bit of news. We've got the ISM, non-manufacturing PMIs, but really there's unlikely to be any surprises. So if you're looking for an entry on the US dollar for now, I would be waiting just to see things settle. RBA, Aussie dollar, the weekly chart, quite interesting. I'm just waiting to see how things respond, guys. So those are my thoughts currently on the US dollar.
All right, thanks, Scott. Okay, so the currency in focus today is Aussie and Kiwi. So we have Jin Dao Tai here, founder of LCMS Traders, a multi-million-dollar trader trading account with more than $15 million on a daily basis. Okay, Jin, I'll pass it to you for the currency in focus.
Okay, thank you, Jinwei, and thank you, Scott and Gim Hong, for all that info in that much detail. So a lot has happened over, since last week to now. We've had the non-farm payrolls, which Gim Hong has told you about. We've seen now today we are, well, in the US is the 4th of July, so markets are probably going to be a little bit quieter for the rest of the day leading into tomorrow. But as we were taking note of, tomorrow, here looking at the news on forextradingasia.com, looking at the economic calendar here, Monday, the US is on, where is it? The US is on a Independence Day holiday, but the rest of the world is still up and about. So we do have a lot of news being released for the Eurozone with the services PMI number and also the UK services PMI number. Not going to talk too much about that because we talk about the euro and the pound over the next couple of days, but you can see not a big change expected in terms of the numbers to be released. But what you should be paying a bit more attention to is tomorrow's RBA rate decision, as we were talking about, or as Gim Hong was just sharing. Expected no change, but pay attention to the rate statement to be released at the same time. At this point, I don't think, or we all don't think the numbers are going to change, but the rate statement is going to give you a little bit of an insight into what the RBA is going to be expecting. In my view, at this point, I think we're going to see no changes come around for the RBA, especially with the new wave. Tired of calling it a new wave, it's a consistent wave already, but a new wave of lockdowns in Australia with the Delta or Delta Plus or whatever variant it is being spread around over there. I just saw the news in the New South Wales, the next 2 days is going to be crucial. So at this point, I think the RBA is likely to adopt the approach where they're going to sit and wait to see what happens before, firing on an action to have more impact from that point onwards. So not going to expect a big surprise here for the rate statement for the Aussie dollar coming from the RBA. You can see that Governor Lowe is going to be speaking at 2 p.m. on Tuesday as well, probably to address some questions for the rate statement, but I don't think we're going to see a surprise. And then we're going to see US. So when you trade the Aussie dollar or the Kiwi dollar, you're going to trade it against the US dollar. We're going to have some services PMI numbers come around for the US, expected to stay at about 64.8 services PMI. The non-manufacturing employment or non-manufacturing PMI to stay at about a 63.5. So a slight downtick, but still in that expansionary phase. So something to pay attention to there. With how Scott was sharing about the dollar index, I think that after it's broken that 92 level, I think we might see a slight retracement before that further strength coming back. So I think this might cause that slight retracement back down to test that support level. Global daily trade price index is likely to have some impact on the New Zealand dollar, but not a big significant impact at this point, I don't think. Following on from that, on Wednesday, we have some news, but not going to be big price movers. FOMC meeting minutes on Thursday morning at 2 a.m. Because the FOMC previously didn't have too much of a surprise, I don't think the meeting minutes at this point is going to shock the markets too much. So following on from that, you can see on Friday, we have a lot of Chinese CPI numbers. Not a big change there. Focus towards the end of the week is going to change to the pound. So remember to check out our analysis on the pound dollar. We've got GDP numbers, we've got all the pound dollar numbers being released, and then the CAD on Friday evening. So what you should get at this point, the feel you should get at this point for the markets is that not a lot of news coming from the US, right? We only got some services and non-manufacturing numbers to be released. For the Aussie and the Kiwi dollar, we only have the dairy price index and then the rates and the RBA statement to be released. So not a lot of news happening, or not a lot of news to be released for this week for the Aussie or the Kiwi dollar. So what to pay attention to here, looking at the New Zealand dollar on the H4 time frame here. The last time we spoke about it, I said I was going to test this 70 or stay at this 7062 before possibly shooting up. What actually happened was similar direction, similar move, just a little bit more exaggerated. So instead of sitting across, it dropped, but the non-farm payroll number did shoot it up. The non-farm number, we were expecting it to shoot up. It did shoot up to now sit at that 7013 level, right? To sit at this 7013 level. So in line with what Scott was sharing and Kim Hong was sharing, I think that for the New Zealand dollar here, we're possibly going to see it sit again, same thing, sit at this 7013, right? I'm going to move this line just so that we don't have too many lines being developed, right? It's possibly going to sit at this level, test this point, but instead of shooting up, I think what we might actually see is the New Zealand dollar head lower from this point. If the US dollar or the dollar index holds that's 92 level, I think that we might actually see further strength for the US dollar, dragging the New Zealand dollar down. What you could be looking for is selling opportunities below that 0.7 level. Below that 0.7 level, if it breaks, you can be looking at the easy 20 pip stop loss, 30 pip stop loss for a very good 60 pip take profit level. So if it's a 20 pip stop loss for a 60 pip take profit, you're looking at 1:3 risk reward ratio towards the downside. If you're looking at a 30 pip stop loss, you're looking at a 1:2 risk reward ratio towards the downside. But at this point, remember that the support level of 6900 is quite strong. Last time we saw it react quite strongly there. If I zoom out to the daily time frame here, scrolling back, you can see that the 6900 is quite a strong support / resistance level. So at this point, I think that if you're trading it down towards that support, I don't think you'll hit that level exactly because of what happened the last time. I think that it will come very close. So be careful, trade it down below 0.700, 20, 30 pip stop loss for 60 pip take profit level towards that 6932 support zone. Okay, so think about your levels as a zone. With that said about the New Zealand dollar, looking at the Aussie dollar, It's moved brilliantly as we spoke about last week. Just a little bit exaggerated again. I was thinking that it was going to drop gradually before a big, massive drop. What happened was it just went straight, well, pretty much a 45-degree move downwards to hit that 7452 support level, right? So this is why your support levels are super crucial. It hit that level and bounced straight back up. Right now at this 7517 level, with no change expected on the rate decision, with possibly no change expected for the rate statement, what I think we might actually see is that markets are going to sit across, okay? Markets are going to sit across until tomorrow, until the rate statement comes out, the rate decision comes out, and then we're going to see possibly it come back down to test this 7452 level again. What this means is that we're not going to see a huge move because there's only about a 50 pip move downwards towards take profit, but this also gives you the chance to keep your stop loss quite tight. So what I'm looking for here is by tomorrow, below a 0.75 level, you're looking at a 25 pip stop loss for a 50 pip take profit level. Still an opportunity for 1:2 risk reward trade towards the downside, towards that 7452 support level. So relatively straightforward for the Aussie dollar and the Kiwi dollar, looking at both a downside move, not a big move, but we're going to see that because it's quite close to the support levels, but I see that move downwards. I think there's a lot more opportunities on the euro dollar and the pound dollar, which we'll tell you more about over the next few sessions.
Okay, thank you, Jin. Yep, so as Jin mentioned, the support and resistance lines are very important. So I pasted up the links to the Udemy course site by LCMS traders. So go ahead and click on it. It's just $20 and you can get the full course over there. Yeah, so just a disclaimer again, any information shared here is not a trade recommendation. It is the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Okay, I do see many of you coming in from the Telegram channel. In case you are not, I've also pasted the link to the free Signals Telegram channel to join that for the free signals. But if you are in there for quite a while and you've been wondering, over the weekend, they have posted a potential profits of 2,000 pips. And you're wondering, yeah, we issued the signals out, but when to get into a trade? Yes, but do you know where to exit? Or do you even know that actually the signals in the Telegram channel is 5 minutes later than they get it in the Traders Club? So I'm just going to get Daniel here to share a little bit more about the Traders Club and see how you guys can benefit from the signals. Daniel.
Hey, Chinwei, thank you very much. Yes, exactly. So, for those who are coming from the Telegram channel, there's some common questions like, hey, the signals are in. Why do they take this trade? And where do I exit out as well? Right. So here in the Telegram, let me talk a little bit about Telegram. The Telegram channel is over there, but in the LCMS Traders Club, what we have here, like Chinwei has mentioned, your Telegram received the signals late. Here in the platform, you receive the signals 5 minutes earlier than what you receive in the Telegram channel. And in fact, if you click at this one here, you can see the signals are issued on time, very clearly, in fact, and precise, and only in the Signal platform, where you can see where we tell you where to sell, what currencies pairs to be looking for, what price, what is the stop loss, and what are 3 possible take profits target. Now, you can profit from this as well, but you want to know what should you do with these signals after you take the trades, isn't it? So in the signal analysis, we not only do that, we also tell you what is the strategy behind it, the reason for every signals that it was issued out, so that not only could you profit from it, you can learn how the signals are issued out and do much better for Forex trading. Now, again, the last questions you have is that most people ask, hey, at a take profit 1, take profit 2, take profit 3, which take profit target should I be looking to exit out? Now, we here in the LCMS Traders Club, we have we also do advise the members here what possible take profit target at which point do you do. So like for example here, the euro pound at TP1, at that point in time we said possible, we look at the market conditions and it says that hey, it could be still be moving, so a continuing downward trend, so we say possible to hold at TP2, so you could continue hold the take to TP2. But if we do inform you, to hold the secure your profits like this one here, to secure your profits, then it's the advice to you to exit out, because we look at the market conditions, the reasons why we give the signals is probably no longer valid, or some market has changed, conditions has changed, so we advise you to take profit and to secure and keep your profits. Now, all these here, you will think this platform, do I get notifications? Do I get that on time? Yes, you can. The platform is available as web, desktop, and a mobile application, which means you can access all the contents anytime, anywhere, and the signals, you can receive the mobile notifications on time as well. Now, and then last question, you ask, how do I access this fantastic club membership, right? So this club membership is access to the platforms. It's worth thousands, but this is your chance to join. Join this club here at tradersclub.lcms.com.sg, right? Scroll it all the way down. We have lots more features than that. I'll tell you a bit more on Friday as well. But most importantly, don't wait. This is without a doubt the least you can do to make sure you achieve your best in any Forex trading. So this price is at $49 a month. This price can change anytime. So make sure you get aboard now. Click on it, sign up, and I'll see you in the members in LCMS Traders Club. Okay?
All right, thank you, Daniel. Yeah, and I think they have a lot more features there, like widgets, education videos, weekly webinars. So yeah, do check out the link and find out more. Okay, so we have come to the end of the session today. We'll see you guys tomorrow for the Euro currency call. Thank you and goodbye.